I've made the return. Yes, back with a nice color on my skin. I had a bit of a bad experience over there in Cyprus with an injection. Remember, don't get stabbed in the ass. Don't overexert yourself, but that's another story. Today, we're going to be looking at the markets and what to expect going into this week. We do have a lot of news coming out, and we are approaching the start of a new month. That means non-farm payrolls. This is always going to be the key leading indicator for the Fed to work out where we are in relation to whether or not they keep increasing these interest rates. And already we know we're going to see some more increases, and they ain't giving us a time when it's going to stop. More importantly, we're going to be looking into Bitcoin. We're going to be diving into where traders' heads are at in terms of sentiment. Are smart money players looking to mark the markets lower, or are they actually done their business, and are we going to get ready to see some more flavor to the upside? Moving on from that, ladies and gentlemen, we're going to have a look at some critical levels in Bitcoin and also the NASDAQ and the S&P. And I'm going to be diving into a couple of things about what we need to be aware of in relation to the stock market to help us understand if the rally is going to continue or not. So let's get with the flavor, ladies and gents. So we break it all down, Bitcoin on the daily time frame, and I've got a couple of zones for you that you need to be aware of on the daily chart. Firstly, we've got this red vector candle zone right here, which Bitcoin in principle needs to come back and recover. So far, it's been holding out. It's probably been waiting for me to come back for the New York live. So remember, if you've made it up to this point so far, I'll be doing the lives as of tomorrow, 2 p.m. UK time, and of course, 9 a.m. Eastern Standard. Now, check this out. If Bitcoin breaks beyond the 24,837 zone, we're going to have a little bit of a problem with Bitcoin coming back into this area of liquidity, which sits between 20,427 and then, of course, 23,932. Now, if Bitcoin has been following the stock market, and we want to understand if Bitcoin is going to do the same thing as the NASDAQ and the S&P, well, firstly, we go over to the NASDAQ itself and understand what's been going on over there. Well, NASDAQ, so far, so good. Looks like it's showing a bit of a promise to come back up into this red vector candle region right here. That's a big imbalance in the chart. We would naturally expect NASDAQ to keep climbing up from this point, only up until we get towards the recovery of the vector candle, because what I like to do is I like to draw off the point in the chart where the vector meets the midpoint of where there's initially a reaction in the chart. So if you can see here at 15,124, I expect a reaction to happen from that point. They're either going to reject that zone and drop back down, or they're going to hold and start breaking higher in towards the 15,695 region. Okay, now stick with me on this one. If we go over to the actual stock market itself, we can see that the NASDAQ has been accumulating a few corrective days. What does that mean? Well, distribution days. If you notice down below here, you can see these pink volume bars. These are volumes or sell-offs that are above average, okay? Now, when we start seeing a buildup of those and prices breaking down, it kind of compromises the rally. Could this be giving us the heads up that they're getting ready to offload and bring prices lower? Well, we need to have a look at the sentiment chart. And this is where we are with smart money, dumb money principles. The logic says that when this blue line keeps moving higher, it means that prices of assets are starting to go down. Retail is effectively selling. And the only way that they can sell is if people are buying. Who are these people? The smart money players. So as long as smart money is buying up whilst retail is selling because of the fear of what's going on around the world and there's no consistency behind how much the interest rates are going to keep on rising, then people are naturally going to get rid of their positions, go into cash, amidst the fear of a market crash. Well, we only need to go over and have a look at these bad boys over here, which I'm talking about very shortly, is the yields. Look, the yields themselves are starting to climb up. We're at that 5% mark yet again, 5.1 on the 2-year. And then that brings us to the 10-year yields at 4.23%. So what does that mean? Yield inversion. Investors aren't locking up money for a longer period of time. And the worst thing is they're not actually even going into the 2-year yields. They're not even picking up 2-year bonds. Why? Because look at the rate. The yield is shooting up. The government is trying to induce people to invest with them. Give us your money for just 2 years, bruv. And investors ain't even feeling that flavor. That's why we're seeing the dollar dominance still climbing up. Gapped up last night at the open of the futures markets, and now we're waiting for them to try and clear that 104,630 zone. You only need to go into the smaller time frames to understand how dollar is behaving. And if dollar is still consolidating, any moves up in Bitcoin might be false for the time being because it could be accumulation of dollars. In other words, investors, traders are trying to get rid of certain positions and put them into cash. This is the problem that we've got. Now, if we go back into that logic, okay, stick with me on this. If we go into that logic and roll into the actual stock market itself, we're only going to see prices moving up if we see a buildup of volume more than above average. That means it's an accumulation day. So far, I'm not seeing it. Look, down below on the right over here, you can see that they're not actually loading up on assets. So it's quite light across the board. There's no volume there for us. And that's just on the NASDAQ. You go over to the S&P itself, and you can see bright as day. Look, nothing. There's not that much happening, all right? Now, going into this week, ladies and gentlemen, we've got some news coming out. Now, all this news that's going to be released is effectively going to trigger movement in the marketplace. It's either going to solidify the idea of the Fed increasing the interest rates, or it's going to make life a little bit easier and people are going to be like, okay, you know what? Let's start loading up on assets because it looks like the data is going to be in line with what the Fed wants, and happy days. Now, Tuesday, we have got consumer confidence and JOLTS job openings. The jobs market is the problem for the Fed because the stronger the jobs market is, the more likely inflation rate is going to keep on climbing up because they need people to stop spending money. Okay, now we keep on going down. You can see we've got ADP non-farm employment change on Wednesday, and then we go into Thursday itself, core price index and the unemployment claims, and then the big daddy non-farm employment and the unemployment rate and ISM manufacturing index all come out this week. And this is what usually happens at the start of a new trading month. Okay, so lots of data that's going to come out and hit the markets that could affect everything that we're seeing right now in the charts, from the dollar dominance. Dollar's leaving us a clue as to where it could end up later on. So just keep an eye on that bad boy over there. We got Bitcoin itself giving us the clue what it's likely to end up doing. And now look, if Bitcoin can move up from this point, any gains that you make short term, take them out. Okay, take your profits and then come back to the charts. If you are only in a position to buy Bitcoin in terms of spot because you're limited to leverage trading, any moves up, take your profits and run. Because look, the range that we see with Bitcoin right now is showing us that they do like the idea of spiking up because they've had enough retail traders trapped in shorts to the downside. So now they're just going to gun for them and take that liquidity and swipe price up, which in principle would mean Bitcoin tries to break higher to only come back down. Now, how high it goes up, different story. That's the thing. It might not last too long. We go over to the actual live order flow and we see nothing much has been happening across the board in terms of volume. If you look on the top right, you can see Ethereum is getting a smack across the face with the amount of orders that are coming in and people selling Ethereum. Quickly go over to Ethereum itself and we can see bright as day that Ethereum ain't looking too good and they're gunning for that liquidity. And you can see there's a problem with Ethereum because we've got imbalances down here and they like to return to those imbalances. So just please be mindful. 1574 could be a surprise point on Ethereum soon this week. So just be mindful of that, ladies and gentlemen. Quickly rolling over to the book map. Let me bring that bad boy over to you. So look, we've got a bit of an interesting story on the book map. Right now, if you look down below here at around about the 25,520 zone, we have got lots of liquidity. You can see it's red. Now, this is where heavy liquidity sits in the order book. Now, if you look closely, there's a gap right there. That means that this area right here, where it had interest from traders before, investors, got cancelled. It got removed from the order book. It could have been a fake order, like we could know it as spoofs. This is the issue we've got. We won't know until that is valid, until it's placed. And we will witness that in the chart as we're watching the book map. Now, you can see here, 25,800, we've got 1,000 Bitcoin orders. So going into the start of the New York session today, remember, at the first hour between 2 p.m. UK time and 3 p.m. UK time, which is 9 a.m. Eastern Standard, 10 a.m. Eastern Standard, we're going to see some manipulative plays in Bitcoin. All you've got to be mindful of is the fact that the liquidity, let me just bring that bad boy up for you. The fact that there is liquidity down below in this area here, as you can see, 872 Bitcoin orders. Then we've got 1,000 Bitcoin orders inside of this zone. Bitcoin's moving away from its VWAP. We would assume that there could be a sweep of liquidity towards this area later on. That would mean that we go into the market right now and we say to ourselves, okay then, let's bring up the smaller time frames. Could we expect Bitcoin to swipe back down? Have they been showing us that flavor of doing so? Well, all you've got to do is look at this area here. You can see that zone there, and then you can see this zone right here. So there's something brewing inside of this area. Always come to the chart and look at the chart and say, look, where am I seeing aggressive behavior? There's aggressive behavior there and aggressive behavior there. If they're not sustaining with the move to the upside, then we're going to be looking at them coming back down to swipe the liquidity. So keep an eye out on this area right here. We're justifying it with the fact that we've got liquidity on the book map, so just be mindful of that zone. So to put it into perspective, guys, remember it's Monday. It's a bit of a quiet day normally in the marketplace. When I say quiet, well, we are down a pool of liquidity because the UK markets are closed. But it's all going to be happening this week. Tuesday, Wednesday, and Thursday are predominantly the best days where you're going to see a lot of movement through assets across the board. And we've got data that's coming out which could make it a little bit volatile. So if you only just watch this video this week, just remember, keep your positions light because news announcements could throw your positions and expose you to a little bit of a drawdown that you might not be liking during those news announcements. Moving on from that, ladies and gentlemen, I will be checking in with you all tomorrow and we will be starting that fire one more time. Back for New York, ladies and gentlemen. Mad love. Peace.